You're looking at a daily chart of gold, and I do believe that we are shifting direction to bullish, high time frame. Okay, I believe that the last couple of days, institutions are accumulating their positions, and I think we are going to see higher prices in gold. Okay, I think that we will get above these highs as well as these highs and tap into this area here where there's a bit of inefficiency. So that's kind of what I'm looking at for gold in the next couple of weeks. Okay, I think the month of July will be very bullish for gold. Okay, this recent move down here where we have taken out liquidity and moved up is, in my view, quite a bullish indication. Okay, so from my perspective, I think we will see some positive price action in the coming weeks on gold. We can do a few calculations to identify where this market may be headed. If we take these two down days, okay, and we firstly, let's have a look at what lows have we taken. So we can see we've taken liquidity. Let me make this a little bit bigger. Okay, to me, this is all accumulation by the institutions and the market makers. They've taken liquidity and they've pushed this up. Okay, we've also come into, let's have a look at this level here, which is known as a rejection block. Okay, where price has rejected. Okay, we've come down to that exact level, and that's basically where price has rejected, and we have moved higher. So in my view, those few things with this accumulation, with this liquidity that's been taken, okay, these lows have been taken and coming into this rejection block, and then the trading that we've had on Thursday, I think we are going to see higher prices. Okay, now the question is two things. One, where do we think gold is headed, and where do we think we'll get a nice price reaction from? Let's have a look at a couple of ways where we can mathematically come up with some potential levels for future price movement to the upside. What I like to do is I'll take these these last couple of days in terms of accumulation, and I'll just project upwards. Then I'll see, does that align with any key areas on the chart? Okay, so if we project a 100% range expansion of that accumulation from the highs, well, this is what we get, 2380. That perfectly aligns with this wick. Okay, so that means, and that's basically where we could target a draw on liquidity back up to these highs. So this here projected mathematical level of these accumulation days is above this swing high. Okay, so if I was to look at forecasting price movement from where we are now, I would just simply target this swing high, because that's very much in alignment with what we are seeing mathematically. We can also target this level because we can see that aligns with this rejection block here. Okay, so that's in very close proximity to the calculated target of a 100% range expansion of this move projected from its high. What I also like about this level is that it would come into this wick, which we have yet to come in. And if I simply just calculate the midpoint of that, you can see that the midpoint of that wick, which is essentially a gap, okay, wicks are just another way to visualize gaps, and you can see the midpoint of that wick comes in very close proximity to the mathematical target of this accumulation projected up by 1 standard deviation from this high. Okay, so that's a very wise mathematical target. Obviously, it doesn't guarantee you're going to get there, but that is one way where we could formulate a view on future price movement on this market based on what we see over the last couple of days. We also have another mathematical target which aligns with the market coming back up into this zone to balance this current inefficiency. You can see that in this price zone, we've only had downside price delivery, and we need to have in that zone, right, between that low and this high, we need to have some price movement moving up. And if we do move up to this calculated level of price, well, that very closely aligns with rebalancing this market, right? So that is very close to completely rebalancing this current open gap. So that's another level that we could analyze, indicating higher prices. Okay, but we take it one step at a time. I think the immediate draw on liquidity based on these mathematical targets will be this level. Okay, with an ultimate objective of back up to the midpoint of this wick. Okay, and then we see what price offers us for higher prices to rebalance this zone. That's what I am currently seeing in this market. The question now might be, where is a level that we could look at for prices to continue moving higher? Some kind of a pullback. Okay, so if we look at a 4-hour chart with our objectives of higher prices based on what we've just analyzed, I do like this level here that I've mentioned previously, even down to this level. Okay, down anywhere in this kind of zone here between this 2310 and 2316 is where I like price to pull back into, because I believe this would be liquidity for a pullback down into this zone where I believe price needs to come back down into. for continuations to, oops, let me grab an arrow, for continuations to the upside, okay, and this would be that first immediate draw on liquidity. Let's see where our lines are. Go back to the daily chart. So they're a bit higher, up around 2380, but this, as I said, I think is the first draw on liquidity around that what's the high of this candle? That is 2368 on a 4-hourly chart. That's that level there, okay. I want to see a pullback, and I like this zone here. Okay, now we might not get there. The market may be strong and continue without any pullback, but I do believe that prior to continuation, the market will use this where people may be long from, okay, as liquidity to come back down, take out anyone that's already long, okay, take out those stops that people may have that are currently long, tapping into this up candle, which is the mitigation that needs to occur. The market has not come into this area here yet, okay, and I believe that it needs to come into this level to mitigate before the market can continue going higher. In my view, that's where I think we will get the market pulling back into. That means anyone that's already long can be taken out, and that'll act as that'll provide liquidity for the market to come back and mitigate this is level, which I think needs to happen. So this is kind of what I want to see. Obviously, what I want to see may not be what occurs in the market. Okay, so monitor this market over the next couple of weeks. Let's see if we get a pullback into this zone. Okay, taking out anyone that's already long, so that'll be liquidity, and then by coming down to that level, okay, this would then be the immediate draw. Okay, as the market then looks to go back up, if it wants to go back up, it'll use these equal relative highs after it's come back down. Ultimately, the first kind of area we might see resistance is when we completely fill in that gap. We might get another reaction, and then we'll get another reaction once we take out liquidity above that level. So the market won't just move up in a straight line. Okay, there'll be ups and downs as the market moves towards its ultimate objective, which I believe, as per the daily chart, is up at these levels that we have calculated together on this video. Okay, obviously we could be completely wrong, and the market may simply continue going down. Who knows, right? But that's what we are going to evaluate for our learning on how price behaves at these levels. For what I see right now is, I believe this is accumulation. Okay, we've taken out liquidity, come into a rejection block. I believe the next draw on liquidity are these highs, then these highs, and then rebalancing at this level, and then we'll evaluate once we meet those objectives. Okay, hope the video was useful. As I said, monitor the market over the next couple of weeks and increase your learning experience by monitoring the charts on your own computer and monitoring live price action. Okay, I will now talk with you in a future video.